Alright guys, welcome back to the channel. I hope you're enjoying this series still. We're in the third lesson now, and this is going to be talking about the second chance entry. This is all about the trading time frame, okay? And this is about the most conventional type of entry in the kill zone, making sure we've got a one-to-one reward to risk or more, and then seeing how we can get in on the trading time frame. So get that notebook that's filling up fast out, get your pen out and take notes, and I'll see you at the end. Alright guys, in this video we're going to be going over the reversal candle entry. So this is the second chance entry, and essentially what we're looking for is a reversal candle within the kill zone. Now that can be a higher high, higher close into a bullish trend, or a lower low, lower close into a bearish trend. And if you haven't watched the modules or the lessons on lower low, lower close principle, higher high, higher close principle, or how to identify a trend, then you're going to want to go and check that out first. Okay, so I'm assuming you will understand how to identify a trend, and we're looking at a bullish trend in this case. So as we can identify market putting in a higher high, a new structure high, what we're looking for is a trend continuation trade. So instead of looking for this zone here in this example, of course I would have looked for that zone initially, but we're going to assume that market just continued down and we didn't get our entry rules met into the first chance entry, so a double bottom in this case at structure on the lower time frame, and we're going to assume that market just continued to push into this zone, which it looks like it did anyway. So what we're going to do is we're going to still build out our initial kill zone, which of course is from the high of the previous high to the low of the previous outside return. And remember, we're shooting for a retest of the high, so this presents us with a problem. The first thing we have to do before even looking for an entry in this zone is building out and refining our kill zone. Now remember, we're going to be looking for a retest of this high here where this crosshair is as our target position. Okay, now the only thing we know at the moment is where our stop loss needs to go, because we don't know where the market's going to pull down, we don't know how big our target's going to be, but we do know that our stop loss will be an ATR based stop below the previous outside return. Okay, so in this case we've got a 15 pip ATR, so we're going to be 15 pips below this low, which is going to put us down at 79. And then using the trick that I showed you in the first video, we're going to identify where we get that one-to-one risk reward. So what we're going to do is bring on our Fib Retracement tool, and we're going to go from the stop loss right up to that new structure high where we're looking to take targets, and you can see that we're at that 50% level. Now that's what we want as a minimum. So that's where we know that we're going to get a minimum of a one-to-one risk reward, and we can't enter any higher than 78.09 in this case. Alright, so we now have our kill zone built out, we know where we can enter this trade. Now we just have to wait and see if market can push down into this zone. Alright, you can now see that we've pulled down into the kill zone, so we're interested. Now we just need to monitor the candles after each close, and we're looking for that higher high, higher close candle. So if we just go through this step by step, you can see the next candle. Right, that wasn't a higher high, higher close. And this candle actually provides us with a higher high, higher close. Okay, so here's the high of the previous candle, and we closed above that. Now, because this is outside of the kill zone, it means that I'm going to have an inverse risk reward. So this isn't a candle that I would consider taking as an entry technique, which is why we build out this kill zone in the first place, because I want to be right more than I'm wrong, but I want to win more when I'm right than I lose when I'm wrong. So with those two rules, I cannot take this candle as an entry. And as you can see here, that market just pushes up and retests the high. So we didn't get involved in this trade. So let's go on to the next one. All right, so later on in this market, we can see that we continued up on this bullish trend. We continued to put in higher highs, and we've just put in this most recent higher high. So we can start to look for that pullback into the kill zone again, and what we want to do is build out that optimum kill zone that's going to meet our maximum risk rules and also give us a nice one-to-one risk reward. So initially the kill zone is from the previous high, the high of the previous high, to the low of the previous outside return. But again, we're trend continuation traders, we're looking for a retest of the high for targets, and our stops are going to go below the low in this case. So that's not a very, very good risk reward. So what we want to do is work out where our stop loss needs to go in order to build out and optimize our kill zone. So as mentioned before, the only thing we know at this stage is where the stop loss is going to go, because we're using an ATR based stop loss, and that is going to be placed below the previous outside return. So if we was to draw in a stop loss here, we're going to be placing our stop loss at 79.25, which gives us a 15 pip ATR based stop. And then we're going to be color this red just so it makes it nice and clear. And then what we're going to do is we're going to bring on our Fib Retracement tool, go from swing low to swing high. Remember, I'm looking for a retest of this high right here where my crosshair is. 80-20 for targets, plus front running your orders. And then you want to build out and optimize the kill zone by identifying that 50% level, because that's where we're going to get that 1-to-1 risk reward. Clear this off. We then know we've got a minimum of a 1-to-1 risk reward as long as we don't enter any lower than 79.73. So let's color this in green, and then what we're going to do is we'll just optimize our kill zone, which is now down here. Okay, so it's no longer up here at a retest of this level here, it is right down here, and we've narrowed down that kill zone for our entry. What this does, it allows us to just remain calm. We wait for price action to push into this zone, and until price action pushes into this zone, we're not interested at even looking at this pair until we can push down into that zone, and then we'll start looking for the entry. So you can see that the market's pushing down, we're now in the kill zone, so we're now interested, but I also know that the candle that forms after this candle is not going to be one that I can use for entry, because the close of the candle's up here. So if we had a higher close on the next candle, we'd have to close right up here, which was not being my kill zone. So let's just see what happens next. Push deeper into the kill zone. At this stage, I know that the next candle could potentially be an entry candle, because we're in the zone. The high of this candle is within the kill zone. So I know that if we close above this candle, we can enter this and it would be a valid entry. And there you have it. As you see, the next candle, this candle here, is a higher high, higher close. If you just bring on the crosshair, you can see we closed higher than the previous high, which means we can now enter this next bar market. So we set at market order, wait for this candle to close, then we buy at market. And then we just watch to see what happens. We don't actually spike down below the kill zone. And then bang, we're out of the trade. Nice profitable trade. So that's a nice example of my trend continuation strategy using the reversal candle within the kill zone. I recommend going into your charts, identifying trends, and then building out these zones and going through that process manually to not only build your RAS, but also to identify these areas that provide high probability trading opportunities and a great risk reward. So go and have a practice with that. So in the next video, I'm going to show you the final technique for entering this trade, and that will be a retest of structure at the outside return. So I'll see you in that video.
Alright guys, that's it for lesson 3. The next lesson is going to be on the final chance entry, which is the most conservative, because we're going to be looking at a potential rotation in the trend. So it's the weakest pullback. However, it's a conservative entry, which means that we're getting really tight stops to enormous reward. We're talking about 6, 7, 8, 9, 10 to 1 at times. So stay tuned, and if you got value from this and you haven't subscribed and liked the video already, do that, share the love, and I'll see you in the next one.